A decade of impact, and now a clear call how and what we are going to build next. With this, let's transition into our panel discussion on building businesses the right way. AI is here. IPOs are really hot at this point of time, and the global markets are moving really fast. But what does that mean for Indian businesses? Bold, ethical, future ready companies that work at God's speed. That is the conversation we're going to have today. I'm very glad to welcome on this panel Professor Rishikesha Krishnan. Professor is also serving as a professor of strategy at IIM Bangalore. He's a pioneer when it comes to thought processes on innovation, strategy, and policy. He's previously served as the director at IIM Bangalore and IIM Indore. He shaped a generation of leaders, and his conversations have impacted not just the Indian academic space, but also the entrepreneurial journeys. His insights can be shared from classrooms, boardrooms, to the national stage. A round of applause, please. Please, sir. We're also joined by Ms. Nritya Madappa. Nritya is a partner at 314 Growth Capital Fund. She's a powerhouse when it is about conversations on capital, scale, and innovation. Nritya started her master's in Stanford on electrical engineering and also has a master's in business administration from Harvard. She helps organizations understand how do they unlock their growth potential, but also helps them to think to be future ready. Please come on stage and a round of applause, everyone. Since we've had a really great introduction with him, Mr. Karthik Reddy, we again welcome you on stage for your great insights. And we are joined by a very, very interesting person, Dr. Shani Roy, founder and CEO, Serene. We're also, this panel will be moderated by Mr. Shailesh. Please join us on the podium. Thank you.
It's me again. So I think similar rules as last time. If you can kind of put your questions on the scanner code, I'll be sure to kind of go through them. We have a pretty experienced panel here, and so I do have a lot of questions, but again, I'm conscious a lot of people in the audience would have questions for them as well. So please keep them coming and we'll get started. Let's just kind of dive right into it. And Nritya, a very easy question to start out with, perhaps, but I wanted to ask you, you work with a lot of founders, you work with a lot of entrepreneurs. One of the questions I keep having whenever I write a lot about innovation, particularly American innovation, Chinese innovation, some of it touches on Indian innovation as well. Do you feel there's a sense that Indian founders lack kind of a moonshot mindset to go after big problems? Is that a wrong way to phrase it, or do you feel like that exists? Going after really difficult problems, going after really hard problems, is that something that you think, or you disagree with me and it's fine as well?
Yeah, I do disagree. It exists. It does exist in quite a lot of abundance, but there is a nuance to it. The ecosystem to support that is just being built, right? Okay. So you can have your moonshot ideas, but when the capital, the academic institutions and their strategies, that's all evolved, by the way, quite significantly over the last decade, and we're seeing more and more folks take leaps into, like you said, AI, robotics, into building manufacturing plays out of India, really rethinking even drug discovery out of the country. So we're seeing really fantastic emerging technologies on that front. But we also were sort of starting on the back foot because India has a plethora of other broken experiences across industries that also need to be solved for. So to your point, I think you call it solving what they know or solving what they see, but there are incredibly deep, nuanced problems to be built for. For instance, what you see as quick commerce, or you see across e-commerce, etc. We didn't have distribution layers. We didn't have logistics really defined. So you've seen foundational shifts happen on that front too. So we're at a different point in history. What India needs is dramatic. I don't know if one form of innovation is better than the other necessarily, but does a founder out of India have the ability to dream really, really big? Yes, absolutely.
That's pretty emphatic. Rishikesh, I think the similar question to you. I just wanted to kind of add that you've probably trained a generation of entrepreneurs. You've kind of seen that growth as well. How do you think about that? Similar question, and has there been a change in kind of thinking as well?
Yeah, I think it's a good question. See, I think in general, when I speak to entrepreneurs, I would always urge them to solve problems which are visible to them. So building a little bit on what Ritya said, when you look around in India, there are lots of problems to be solved. And they don't always require moonshots. Sometimes they might, but they often don't. So there's a lot of work to be done in India just to address many of those problems. Having said that, I think there is a little bit of conservatism in the thought process. Even if you look at academia, for example, you look at many young entrepreneurs, I think they're sometimes held back a little bit by expectations, or even folks like VCs, who ask questions like, which company are you like, can you just tell me which is the American equivalent of what you're trying to do, things like that. Mm-hmm. So there are all those kinds of questions which come up as well. But I think I would agree that with Ritya, it's changing, but it's changing a little bit too slowly for my liking.
I understand. Karthik, I'll let you respond to what Rishikesh has said, but do you want, okay, cool. I did have a slightly different question for you, and I think to kind of give the context for this question, there's a lot happening outside this room, especially there's a lot happening outside India right now, and that's affecting what's happening in India. And I'm particularly talking about Trump, tariff, tech, trade war, what do you have it, right? There's just a lot coming at us. One of the things I've heard repeatedly from a lot of people is it's not going to affect India much because the domestic economy is so big. Exports to US, for example, are a small share of our overall thing. We should be fine. But that begs the question, do you think our large market, I can see the advantage to it as well. Do you think that could also be a hindrance in terms of when I compare against more export-oriented economies like Taiwan or South Korea that have to go abroad by default? Is this a blessing? Is this kind of a little bit of a hindrance to our thinking? Kind of on a similar frame, but more on kind of the local market.
I think it's... to both their points, I think it's taken a little bit of time for India to build courage that we can be building for the rest of the world.
Okay.
And it's a too slow a cycle, that I agree. I mean, we don't get the feedback loops fast enough. We need quick role models in our ability to say that we can have hundreds of these. Mm-hmm. And the market size does expand by 100, if not 1000x, if you step out of the country for certain types of products.
Okay.
You can't fool yourself into saying I'll serve an Indian customer on, making house loan, home lending efficient, and say that this is translatable in an overseas market. You have to believe that that market is large enough in India to start a business of that nature. So I think if you look at commerce, I mean, India's foundations are commerce ka dhanda, trading, financial services. And then the must-haves for us to become a superpower, which is education, health, mobility. So if you see, a lot of the value has been created in those segments, and there's a lot more room for improvement out there. And those will be the domestic legs that will be better handled by a technology-first economy that the venture guys are helping build. Whereas if you truly take tech, which is cutting edge, and you want to compete with the world, you can't limit yourself to Indian borders. It's too shallow a market. Right? As I've said earlier as well, I think the buying power is limited. We are not the fastest adopters of technology.
Yeah.
So you actually get the product and the pricing and everything wrong for like 5-7 years of what is supposed to be a 20-year journey. It's not fun at all. So there, I think the confidence to go out and say the world is my oyster in that sense. And essentially I can play in any market. That courage is coming in, but it's slowly because you can't go do it alone. So today, for example, I'm able to find talent that's worked and built, tens of millions of dollars of revenue basis in the US and is not necessarily white-skinned. Could be an Indian guy who's actually gone there and built that for an Indian company.
Yeah.
Inconceivable 10 years ago, right? So the cycle does take time, but that confidence is growing. And I think I wouldn't be surprised. So already, by the way, in early stage tech, about half the firms are specialized already. So somebody who does consumer brands India will do only consumer India today. Somebody does only deep tech, which is by design global. Somebody does only cross-border software. Somebody does only fintech. So I think that's a great sign of what's to come.
Okay.
That there'll be specialized small pools of capital, which take certain types of risk. Once the business model stabilizes, it doesn't matter whether you're building robots or you're building financial services. Like that's what the public markets reward, which is profitability and growth. So when that emerges, more and more capital will come our way. But right now, I see that the world is slowly going to move to not a 70-30 ratio that we have. I think that's the ratio we invest in, and we broadly see in the market as a generalist. That about 30% of the bets we make are things that can go build globally, 70% is domestic. And that I think will become 50-50 over a period of time. Okay. And I don't think we need to be like a Taiwan, which has a smaller local economy. Neither do we need to be like China, which has 5 times the size of economy and can solve a lot of things domestically. We don't have that luxury. We can't suddenly hit a accelerate button and go to $12 trillion or $15 trillion. So we have to be conscious of, what scale we can get to and then keep compounding after that. We can't just accelerate rapidly there. So I think the ecosystem has broadly got the message, and we are iterating now, and we'll find this balance over by the end of this decade, I feel. Enough number of IPOs in each segment, enough cross-border stories, enough global M&A. All of that should play out in the next 5-6 years. 2030 to 40 will be like the golden era of venture, I feel.
Okay. Before I get to Ishani, just another reminder, you can throw your questions at the QR code and we'll kind of go through them. Ishani, same question for you. You talked about kind of expanding, starting Serene in India and then expanding as well. What's been your experience as kind of an entrepreneur for the same thing?
I think first and foremost, it's like you said, it's not something that it's easy to feel the cushion. And because in India, say for example, we are a B2B company and in compliance space, right? So I'll just throw this question out to the audience. How many registered companies are in India, do you think? Approximate. Anyone here?
Registered companies?
Registered companies.
It's 60 million.
Close, not.
2 million now.
The others are SMBs, sorry. So it's
yes.
Yeah.
So I think active registered companies are some like 30 something lakhs. Okay.
30 lakhs, only 3 million.
30 lakhs, right? Active. Because closing a company is, yeah. So imagine, and how many do you think are compliant under sexual harassment? Anyone here?
0.1%.
0.1%, Karthik says. Anyone from here? Our auditors are here, but anybody? About 20,000, less than 20,000 companies. So imagine the opportunity here. I'm never going to go out of business. So, I mean, whether I grow or not, or scale or not, it's just like it's going to flow in. And if you do it well, you know it's organically people are going to reach. So you don't even need a sales team out there. So to actually go out there and say that I'm going to move from India to outside, it takes a lot of mindset change. It is, like Karthik keeps saying, then he knows the micro level. But for us, it was a point, it was like a switch. We said that we have done it, and now let's just do it. And it was literally one day we said that we are not going to call ourselves an Indian company anymore. We are going to completely give it a different spin. Like Karthik keeps saying that it requires a different way of hiring. It requires a different way of speaking. You need to be out there. And it's not easy because you're starting from zero. And again, it feels like, oh my God, no one's taking me seriously anymore. And I'm the odd one out in the room. So it takes a lot of courage to be able to do that. So I'm not going to talk about there are too many people in the room who do fund these companies, so they know a lot more than me. I just can tell our experience of it. We started small. We decided that we have proven it in India, so we're going to go to East first, Southeast Asia. So for us, it was actually Indonesia, Vietnam, and Singapore. So we said that, they're not only, they're a good market, the laws are similar.
not only laws are similar, the patriarchy is similar, so we know the societal gaps that we need to fill. We also said that they're used to working with Indian companies, so they know exactly, an Indian facilitator walking into their room is not a new thing for them. So we solved that first. Once we got those numbers, now use Indian numbers, right? Once you say I have 500 clients, immediately people will start taking you a little bit seriously. Then we decided, okay, you have to go west. Now, how do you go west? And I'm thankful that we decided against US, because now it would have been not an easy to continue. But yeah, we decided to go for Europe and UK once again, because you know the law very well. So for us, it's every time, like Karthik says, it's a market fit. So we know the law, so we quickly go in, and that's what we do. We know that the law is changing here, and we are going to go in and put in our resources there.
Got it. I wanted to shift from this to, again, addressing some of the question for the previous one, which is, there's a lot of turmoil going on in kind of the world right now. Rishikesh, a question for you. Is this something that entrepreneurs should think about? Is this a distraction for them because their kind of world is much smaller, or do you think this is something they need to account for, think about, and if so, what should they, how should they think about this?
Yeah, I think one thing entrepreneurs should take into account at the current time is certainly increased volatility. I think that's even before, in a way, the Trump revolution started a few months ago. Volatility had increased anyway from starting from COVID onwards. So I think whatever business you're planning to start or run, you need to build that into your business, your resilience to different kinds of volatility, whether it be in markets, regulation, economy, whatever it is. So I think that's something I would certainly factor in irrespective of Trump. Trump has made things a little more dramatic. He's made things a little more, I don't know what you want to call it, visible, and you're sort of getting something new every day. Maybe the normal volatility, so-called normal volatility, is not that exciting, but I think that's something I would certainly imagine you do need to keep track of.
Got it. I think this is a new kind of record. We've gone 1.5 hours without mentioning AI. And so this has to be. So this is where the AI question is going to come in, and this is for the investors, Nitya and Karthik. My question is a very specific one, which is, what is India's and an Indian startups role in kind of AI? So again, I'll explain my context. One is, of course, AI for India, AI-based solutions for India. But then AI is no longer just a domestic thing. I think there's a global race happening. Different countries are trying to figure out where they fall in the stack, whether it's the hardware stack, whether it's software, whether it's applications. Maybe Nitya, I'll start out with you. Like, how do you think about what should India and Indian startups' role be in this kind of global AI ecosystem, as it were?
Yeah, I think I'll be very upfront. We are definitely playing catch up and quite slowly. Whether it is talent pools, whether it's infrastructure on ground, particularly the game on foundational models, I think that just broadly is not one that we can start right now and necessarily win. So we are doing it. We're putting the roots in place. But where we have the right to win, and India has always been really good at building very sophisticated product layers for very specific niche needs. So for instance, one of the big markets we're seeing deploy AI quite aggressively, and which is very, very weird for them in terms of consumer behavior, is the banks or financial institutions today. And they have a plethora of different types of use cases. In fact, even AI-led fraud, they have no idea how to handle some of these things. So it isn't just applications to existing solutions, but problems that were created by the advent of AI as well. They're massive institutions. They're the largest in the country, and they're actually deploying AI solutions at a very rapid pace. So building for them, thinking about like businesses like healthcare data analytics, like clinical research data, et cetera, that's actually processed in the country. What are the layers to build on them? That's very, very essential. So the kinds of bets that we are backing, one very big concern remains that, how quickly they'll get, out innovated in this, because AI is also quite a rapid cycle of innovation and upgradation. But also the thing that is unique about this brand new technology, which hasn't been the case with, previous ones, where startups always had an edge, you're always more nimble to market, is that the incumbents actually can compete. In fact, they're able to compete maybe sometimes faster because they own distribution. So they can pull up tools, for instance, like in Adobe. I was talking to some of the leaders there, and they're like, we put 10 startups out of business every week with what we push out of our internal thing. Yesterday, Epic announced, which is the largest EMR, like literary source of truth in the US healthcare system, announced that they were launching their own AI scribing facilities within the platform. And if you've tracked that space, you realize an enormous amount, actually nearly, I think, $500-600 million in the last couple months alone, have gone into AI scribe companies for healthcare. So you're seeing very different forms of innovation. So startups have to thread, like, what is your serious right to win, not just out of India, but even out in the US. So it's a really interesting dynamic situation that, you're seeing very, very unique models in a super hyper competitive environment emerge. And the stuff that sticks, I think it's still a little too early to say. I think the basics of find a really deep problem statement, build something critical and niche that no one else is looking at, and nobody understands that problem. That core truth of innovating and building startups remains true even in this AI hype or not cycle. But like the competitive nature where you can get out innovated not just by other like startups, but or the ones who own and drive the models, but even the incumbents is higher than we've ever seen before. So it's a very, very interesting space to invest in. I don't know, Karthik, what do you think?
No, I don't disagree with anything Nithya said. Yeah, and the only way I'll frame it a little differently. As I said, nothing to disagree with what Nithya said. I think we have the same concerns when we look at the space as VC. I think it's very difficult to compete on things where there are global leaders, either in horizontal or foundational infrastructure stuff. The gap is too large, which means just this morning I was talking to one founder who said a lot of stuff now is up in the air. It's in the hands of the India AI mission, right? There's something called the India AI mission. So they have to get their act together and sort of try to cordon off the country for anything that's localized to the country, including data, in my view. At the end of the day, however poor that data, that customer or that data set might be perceived to be, we have 1.4 billion people. So anything relating to the people of this country should stay on inside this, the boundaries. That's one clever way to create value for the future. If you let that leak to an American company and they use that data, then we've lost that as well. So for the first time, the warning signs are there, and I think you can ring fence that risk by which you could never do before, which is why we're all Google users and Insta users and whatnot. So there's some thinking going around on that front that all hosting, all data, all ability to audit that, everything should be onshore. So that's one mode to build, and that has to be enabled by the government. Then the second is, therefore, the application layers for India, I think, will be built in India. Which means most products, whether it's enterprise, SMB, consumer, can be reimagined as AI first. And so that might disrupt the very startups that we funded, but it's a good thing, right? It's very Schumpeterian in its way. So it actually should it should just come and build better for more efficiency, less cost, etc. But it's not necessarily as true as it seems. So for example, yesterday evening, we were pitched an idea which was around AI tutoring. But at today's cost, it's not viable. Even if you charge $20 a month, you can't make money because the token calls are that expensive. Now, the pitch and our listen is that the token cost will fall by 90% over the next 2 years. But in the US, that's a no-brainer for the cost structure that the US can afford. In India, you have to do a double think. What if it doesn't? Is India the right market? So I think people building application layer, the world again is the open market. You can compete just like you did in SaaS. And I think for the first time, you have a shot at competing in consumer on a level playing field that you never had before. So we have like 3-4 bets, which are Indian founders sitting in Bangalore and Delhi saying we can be the best app in the world. AI first, right? And so I think we should stick to our strengths and play application layer. And we should take moonshots at the consumer side and say, why can't, if there are 10 new TikTok-like ideas by the end of the decade, hopefully we'll have 2-3 from India. That's my hope, right? And so that's one. And on the enterprise SaaS front, from what little I'm hearing, it's still full stack. You can't go to a healthcare system in the US and say, ye lijiye AI tools and stack, ab use kar lo. Whether you're American or Indian, it doesn't matter. You got to service them like an enterprise SaaS play, which means there is opportunity for you to go and build a brand new AI first tooling for them and then do managed services on top of that. So I don't think enterprise motions change, but to Nitya's point, incumbents have a huge advantage then.
Yep.
And therefore, there should be rapid AI acquisitions, which you're beginning to see. Somebody's built something better. This guy can become 100 billion if Google is selling it, or it can become 20 billion if Meta is selling it. I'll buy it.
Yep.
And so you're seeing engineering talent wars and early tech wars in that front. Can India participate in any of those wars? Absolutely not. We just don't have that firepower, and neither do we know how to actually utilize it in an American customer base. It only makes sense if you can use it for the Americans. So that's sadly the truth. But I think I'm bullish on application layer stuff. And I'm bullish on reinventing how we build a lot of stuff for consumer SMB in India, which is not people intensive. And when it becomes people intensive in India, things break or they grow too slowly. In terms of distribution, for example, suppose you had to build a tool that had to be sold like Tally today, it's very expensive, right? If you had to sell to someone who can afford only $10 a month, it's very expensive. So those things I think we can be reimagined with AI. I'm bullish about applications, but it's not like we have hundreds of great stories yet. We're beginning to see green shoots, right?
Understand. Thank you. I'll take a question from the audience, and this is, I think, going from kind of macro, now talking about specific company building, which is around examples of companies going bad. We've talked about a lot of companies and successful and things like that. There have also been very high-profile blowouts in the Indian startup scene. Rishikesh and Ishani, I guess, since you work with a lot of companies as well, this question is for you. Are there certain traits you think around ethics or growing too quickly that need to be imbibed in Indian startups, or this is you just see as a natural way of kind of the ecosystem where some succeed, some don't, or do you see something kind of that needs to change in terms of how founders are approaching it, bad behavior, sometimes outright cases of fraud as well, without naming names? Is this something you worry about, or do you see this as a natural evolution of an ecosystem that is so busy?
Well, I think bad behavior and frauds are not unique to India. They exist all over the world. India, unfortunately, we've seen some fairly high-profile ones, including the ones you mentioned. I think the challenge is really on the governance side.
Okay.
I think there is some space for strengthening governance, and the fact that you're a startup and you've got this aspiration of growing at breakneck speed doesn't mean that you can just cast aside governance and not worry about it. So I think that is certainly something which needs to be addressed. And some of the high-profile examples that you just spoke about were visible in the public eye for quite some time as many of these things were unfolding. Yet the governance structure was not getting put in place, which was a bit of a surprise to me. I mean, I would have expected to see that happen much earlier. So I think that is the essential challenge at this point in time. I wouldn't for a moment think there's any particular reason to believe that Indian startups or Indian founders are any more unethical than anybody else. But certainly there's a need to put in place better governance structures. And there I think people like investors and so on do have a role to play in making sure that happens, particularly when the kind of resources getting invested in those companies is very significant. And the nature of their business is such that there is a possibility of, let's say overly aggressive sales tactics and so on, which, might result in the kind of challenges that we have seen.
Interesting. Ishani, you work with a lot of founders without naming any customer names, but I'm just curious what your observation has been.
Yes, I think as we work on compliance and culture both, you kind of have a front row seat into what goes within the company, and not just what is going on within the company, but how things are dealt with. And biggest, I think, lesson comes out of when something goes wrong, how it is dealt with. Now, the smallest of ways is who has the power to speak, right? Are people speaking up when they're noticing something, whether there's safety in actually pointing out when something has gone wrong. Most of the times people know inside that something's gone wrong. Before it even goes to social media, are there any checks and balances there? So a lot of it is about speaking up and who is enabling that speaking up, whether it's being taken seriously or not. A lot of it does come down, trickle down from senior management. Now we work with a lot of them, so obviously having a data mind or a little bit of scientific background, you start to kind of correlate things. It's definitely not a causation, as Professor Krishnan said. There is definitely not something that you can pinpoint, this is what goes wrong. But there are several sort of inflection points in a company that you actually get to see. And Karthik and Rutya will probably know that very, very well. It's typically funding rounds. And every time it has been true that when you go to from 50 to 500, there is always a pitfall. There is always something that can go wrong. And if the founders, typically founder-led companies, if you don't have a strong hold on it, things can definitely go wrong. And we see that very, very often. We not only see that, we actually see, companies closing down, right? We are the compliance, so we are the last vendor to go. So we are there till they become 9 people. So we also see that journey of closing down and how that is handled, how people are handled. So it's not just about retention, it's also about how people are staying with you till the end. There are so many stories of like the core team staying literally till the end with a founder when something is actually done right but didn't work out. So these are some of the things that kind of indicate how the culture of the company is. I would definitely say we try to correlate with leadership. Founder-led companies versus non-founder-led companies, there is a correlation to that as well. How you grow your managers, how you grow your second level, all of these things kind of play into how culture builds.
Makes sense. Thank you. I'm going into the questions, and we have a lot of questions since we have two investors on the panel. So I'm going to paraphrase a couple of those questions, which is essentially how should founders think which is the right time to raise capital, which is a very basic question, I know, but I think it's a very important question. So maybe Nitya first to you, and then Karthik, which is what is kind of the calculus that founders need to go through when they're thinking about raising capital? It seems like an obvious question just raised, but I know it's not that simple.
It's really not. It's genuinely whenever you're in a position of power, the worst time to raise is when you have run out of money or you're close to that, or, you know, think about this, right? Like, so whenever you've hit and you've proven that you've seen initial customer love, the right kinds of like initial metrics trickle in, you've got revenue, you have proof of that special sauce, and you have some money in the bank. Like, you're not at the mercy that if this round and this thing goes sideways, you'll have to take the terms that are dealt to you. Like, first of all, the reason you should do it from a position of power is, one, of course, it improves your chances of closing, but it also, like, it changes the bearing of a founder. Like, when you walk into a room and you're in a position of power and you know you've got your metrics right, your company's firing, like, the ability of that founder to sell is in a completely different level. As opposed to, you see like a 12-month ticking clock, you know you've not hit necessarily the full metrics, your competition is gaining, etc. So the full, like, the fundraise is not an event that should just like be isolated and launched by a ticking time clock on your runway. It is literally something that you build on for a whole full year. Your next fundraise needs to be planned when you raised your previous funds. Literally, like, how much time, what are the metrics, what do I need to get to? One of the very big mistakes some founders make when they raise their earlier rounds is not to raise enough to get to that milestone, right? You get halfway there and then hope that someone's going to reward you that you've got proof of, like, maybe it's sort of going the right way. You got 3 months of proof instead of like a year under your belt, etc. So I think when you plan fundraisers, you should realize each of them have to get you to that next milestone. It's a completely different story, however, that the market changes these milestones on you quite frequently. So for instance, in AI, like $1 million in revenue ARR would have raised you a Series A like 4 years ago. Today, that bar has moved. There are different things that you need to have proven out. If you're doing a US GTM, you should have had like your first hire there before you come into raise. So you have to realize you have to set that plan, you have to raise appropriately, and as a founder, be continually aware of how that market is shifting. And this is where your investors come to hand, because their job is to keep track of how these benchmarks are moving, and hence how do you need to tweak your business. I'm not saying build your business for an investor, but like, you should know which key North Star metrics you're being judged by. So simple answer is don't raise when you absolutely have to.
Position of
Please.
power, yeah. No, that's the thing, good one. Karthik?
Yeah, no, I think again agree with everything Nitya said. I think the only nuances and examples I would add is um, I don't like it when founders tell me they're not raising. It has nothing to do with not being able to tell your story. So for me, anytime you run into an investor at an airport or I meet an investor and says, hey, that's an interesting company, can you introduce us? I don't care whether you're raising or not. It's a chance to market yourself for a future conversation. And that goes back to position of power. The fact that you don't need money is position of power. Why? That is exactly the time you should be talking to them, not when you need to raise. And it's amazing, even second time founders, even founders who have seasoned, who are raising their fourth round, will somehow give the same answer, right? So I'm saying what happens is, I'll tell you the problem. They see it as a chore. They want to go back to their business every morning. And it only falls on one person's shoulders. So that person has 20 things to do. So they say, like, why the hell am I getting into fundraise mode? The reality is, you're the only spokesperson in the company who matters when it comes to fundraising. No CFO, no some investor relations, whatever. And if you're not able to tell that story and excite them, I think the biggest pitfall of a founder is inability to switch contexts and be able to tell a story which has nothing to do with fundraising, but is actually fundraising. It's the pitch of the company. So how can you not have a deck at any point? So I eat my own dog food. So we fundraise, we close the fund, we trash the deck. We say, I can never use that deck again. It's done. Now the new story for the next fund will be a different narrative. And we start thinking on those lines. And we always have a marketing deck. So if an investor is saying he's coming through India and he wants to say hello, I simply can't keep chatting with him. I need to have like 5 reference deck, slides out there. So I always have to create a deck. My job is money. Like I have to raise money, right? So I get it. But they don't realize that that's no different for them until they get to profitability and they say, screw you, I don't need anybody's money. I can go public, I'm bootstrapped or whatever. You reach that point, then I'll be happy. You know why? Then I can sell my shares. I really don't care whether you're raising money or not.
Sure.
Right? But I don't think enough founders do this very well. That's a sad truth. Second, to reiterate, and what's very important to Nitya's point is, people pitch a set of metrics, pitch a timeline, and they fail on one or both. And that obviously sets you up for disaster. Meaning you can't, not to trash my poor friend Kabir, I love him as a founder, but in Danzo's case, you raise 200 million and you run through the capital quickly and you don't hit your milestones. Everything implodes. Suddenly you have a company that goes to zero. So you should have either, and maybe that was agreed by everyone, but the rules changed mid-course. The rules changed mid-course.
Yeah.
So the market was changing, your investor was changing, and you didn't course correct. So, the companies that have survived the pandemic bust are folks who cut costs dramatically and ensured that their burn is 7-8 years of runway. Because they know they couldn't have justified the valuation that they got.
Yep.
So if they raised at 1.5 billion and they raised 200 million, right? What is the natural instinct to go and say, oh, now I'll go raise the next round at 2? That same company is raised at 1 billion, 100 million now, and they still have 50 in the bank after 4 years of that prior raise. So learn to survive. So you have to be adaptive and be clever about fundraising. So all of what Nitya's points were very valid.
Ishani, question to you. I know you are conscious of the fact that you're with 2 investors, but you're bootstrapped. And so question for you is, what is your thinking in terms of bootstrapping, and then what is that, why has that calculus been the case?
I think bootstrapping is something that in the recent years, people don't talk enough about. And I guess maybe it's awareness, but when venture capital funding came about, we kind of, as a new generation of entrepreneurs, we stopped talking about the traditional business building, right? We really did not think about the Kirana stores and every single other promoter-led company. That used to be the case. That's how it was for a long period of time, and great for venture capital funding. So you don't have to really go to a bank and take a loan anymore. Your idea, or you who you are, can actually get you the money to start off something, which is great. But for me, the reason for bootstrapping is I actually come from a family business background. My family is here today. Between all of them, they have a workforce of about 10,000 people. For us, I grew up with that mindset that you take risks, but there are people's livelihood depending on it. So you take risks in a measured amount. It is something that was in my DNA, so I knew that is how I was going to do it. And then, yes, I knew how to utilize my profits in order to make the next one. And this, just like Karthik says, for us, COVID was a big turning point. We actually took all our content, put it online, went after every single country we could think of, and change and put it out there in like 15 different languages, right? And the moment that money came in, we realized that we have built up enough runway that we can actually now go ahead and start, register a company in that country. So yeah, bootstrapping is, but one of the things about bootstrapping, a few things that has taught me about with bootstrapping is you really don't have the time to do some things, right? You're constantly looking at numbers, and that's something that I do with my finance ed every single month, that look at the numbers. And one of the things that it gives you is that you just put your head down and work. And you just have to continuously keep thinking of how you're going to build up that revenue. The second thing I think is a biggest learning, and every single team member, no matter whether they're a designer or a marketing team or sales team or in operations, for us, we talk about is the client, is the customer. For us, if they don't pay for it, we don't have any money in the bank.
They're the OG financier.
Absolutely, they're the OG financier. If they don't like something, they are not going to renew that contract. If something goes wrong, I personally speak to them. If something, retaining clients for us is it's not easy to retain a client for 9.5 years. Something new has to happen. Like Karthik said, practically scrap the deck, start a new one. We never do the same thing with the same client. Every single one of our engagements are different, and that's probably why they think it's good. But yeah, end of the day, it teaches you there is the complete reliance on your making yourself better and your client.
If I may add 2 points.
Yep.
I think 99% of businesses are this way, by the way. So please understand, when come and ask for venture, what game you're playing. It is a little bit of a game. It's very honorable to be an entrepreneur and build value, but you're playing a different game. You're in a different matrix. The speed is like 2-3x. And you're effectively taking advantage of a technological or a business opportunity disruption that's presented itself, right? It's not like you're building a legacy business and trying to build it better. That's not venture. That's private equity, but that's not venture. So therefore, you have to be sure that you're in that game. And as much as Serin felt like it was doing something novel, that's not the game in terms of the speed of adoption. And it's not like by June 30th, the government says, all of you have to become compliant. If that were true, she should have raised venture capital, right? That if it is semi-voluntary or 90% were going to flout the norms anyway, or going to take 10 years to get there, it'll be foolish to raise that kind of capital and just spend it away when you know that it's going to be an iterative process. So that is, I think, the difference between their world and our world in some sense.
Got it.
Though both are entrepreneurship.
Question from the audience, and this is for you, Rishikesha, which is around more on, I guess, strategic thinking, which is how should founders think about solving a problem which is either going really deep and narrow or shallow and wide when starting out? I know this is a general question, but just in terms of the mindset, the kind of problems that you're solving, I think some of it alludes to what Nitya and Karthik have talked about in terms of the size of the market you're going after. But from a mindset point of view, what is kind of your advice here?
So I generally tend to believe that it's good to start with a narrow problem to start with, but then broaden out as you're going along.
Yeah.
And I think this also makes sure that you have a good value proposition for the customer that you're addressing. And I think you need to deepen that as you go along, which means that you need to add additional elements in terms of not only how you're solving the problem, what is the value you are creating and offering, but also in terms of at the back end, the capabilities and whatever it is you have in your organization to deliver that value proposition much better than anyone else. So that's the way, I mean, I would generally look at that problem. I just give you a simple example. One company which I studied in some detail is Digit Insurance, Go Digit. So if you look at what they did, the founder came from this whole idea that, this motor vehicle insurance stuff is all broken. There are some basic things that are not happening. For example, customers are not easily able to file their claims because they're not able to demonstrate what actually happened in the accident. Surveyors take a long time. There's corruption, all that stuff. So can I just really go out and try to solve this problem? And then he also realized that a lot of intermediaries in the insurance industry are also facing problems because they need to customize their policies for individual customers, but the insurance companies are not supporting them by providing a good platform that can make this happen. So there are kind of two simple problems he started with, but he didn't just stop there, right? I mean, he started with that. He created some differentiator for the company. Then of course, you can't be a general insurance company and be only in motor vehicle. Obviously, that's not going to work. So you have to get into the other segments of the general insurance business. And then he also realized that technology actually has the ability to provide that differentiator by what they did in motor vehicles. So they use that same philosophy to broaden into other segments of general insurance. So I would imagine that's a fairly good way to do it. Unless, of course, you've got this really huge problem, which is fairly homogeneous, which you can, try to address a big part of the market at the same time. Otherwise, I would largely go on that course.
Got it. I guess now the question I have for each of the panelists, which is more around if you had one policy wish from the government in terms of enabling, and this is one, some of the questions and the topics we've been talking about in terms of kind of growing the startup ecosystem, taking it to the next phase, what would that be?
I think mandating large institutions in this country to put their money where their mouth is behind the Indian ecosystem. So whether it is institutional LPs, institutionalizing bases like, insurance companies and endowments, etc., to start, directly investing in GPs, having, again, everyone thinks they can run their own fund until it's very difficult to do it. So partnering really properly. I think there's a lot of money that is earmarked in the right direction, but it gets diffused across the ecosystem, whether it's, for instance, now we have a fantastic thing on the deep tech side, a lot of pools of capital set aside, but again, leveraging the entire private industry in India and even public companies, etc., and having them put their money where their mouth is and support ecosystems in more tangible ways. So I think just around almost opening up the rules for existing private industry to be able to more directly invest within the innovation ecosystem.
Got it. So deepening the capital pool for investment.
Yeah, so I'm not going to speak about all these industries, which I don't know too much about, but I'll speak about education, which is the one I'm most closely connected to. So I think a great thing that's happened in the last couple of decades is there's a huge set of private institutions which has got set up, particularly in higher education. We have private universities, many of them started by people with a lot of interesting ideas. I think there's an urgent need for the entire regulatory system around higher education to be just loosened up. There's been a lot of talk about it. There's the national education policy, there are many other things, but on the ground, things haven't changed enough. So I would just say there's a huge new opportunity coming up. There's an integrated regulator they're planning to set up called the Higher Education Commission of India. I would just say make sure that HECI really looks at this whole business of education regulation in a very different way.
Yeah, I think I love both these ideas, a couple of my favorite ideas, but I'll maybe go to the core of what I think can make India truly special 20, 30, 40 years from now, which is I feel like if we don't fix primary education at the grassroots level across the country, the debt that you pay to equalize that family takes a full 25 years. Basically, that kid has to somehow figure out becoming a delivery boy at the age of 21, move to a city, get a job, get a city education. By the time that kid actually generates that income for that family and has that opportunity to crack an IIT or a big college, another 25 years. It just sounds ridiculously late, right? And, I only partially jest about it. It's like, what is the equivalent of army conscription for primary education conscription? in this country, how do you ensure that every child gets almost the same education, like almost identical, like, and primary? So there's, as much as I love, I'm Hitesh's classmate too. I am Bangalore, same class. They had their first batch of Plaksha graduating this weekend. Phenomenal moments. 100 students, right? I love what they're doing, but 100, how are we going to solve this? Okay, built 100 Plakshas, 100 IITs. Okay, so then by the point I'm trying to make is it's not equal opportunity at all. And I feel that's very sad that we really haven't set up like something like if you take a kid who doesn't have basic math skills and say I'm setting up the most fantastic JE coaching, so what? That kid lost out 8 years ago. So there's no chance of that kid catching up. So I feel you have to fix that at age 3, right? I don't think parents at home can fix this. That's why conscription, I use the word as a very strong word. I don't think parents or that ecosystem can ever fix this. It has to be militarized almost. I don't know how we do it, but I would love to see something in that direction.
Interesting. Ishani?
I think I'm just going to say something really practical. Work with a lot of smaller companies, and one of the things that I feel a lot of small entrepreneurs can definitely benefit from is the ease of starting a business. Registering a business in India takes, and getting a GST certificate takes months. That's not the case in rest of the world. And even not just that, closing a business takes 2 years.
Yeah. So it's longer to close a business than to start a business. Yeah. Okay. All right. I guess we're coming to the end of it, but this is kind of a final question for each of you, which is, can you give an example of one of your priors that you have changed over time, particularly when it comes to company building? Something you thought was true, but over time you've kind of changed and it has challenged you and you've changed your opinion on that. Sorry to put you on the spot, Nitya, but you're first and they get that time to think about it.
That I held. I think, give me a bit. and
Sure.
you Start with.
Okay. Maybe Rishikesh, you can start with and we can.
I think I sort of maybe tended to put too much on the individual, but I think over time I've much more convinced about how important the team and everyone else is in it. So this idea of, kind of heroic leadership, though I know in the earlier round, Karthik was speaking about how, there's this one face who's the CEO, but I think that's probably important from the investor's point of view, but from the overall success of the company's point of view, I think I probably underestimated the importance of the team earlier, and I think it's much more important today.
Got it.
I think for me, if you look at our first fund, we made those 100 crores go past 70 checks. So for us, it was about the thrill of backing more and more people. So, the slogan, "May 1,000 founders bloom," started back then. I'm still not done. I think we can get to 1,000 founders. But I'm just saying, the thrill of like backing every good idea, every good entrepreneur has sadly gone away. Because I find the act of like this quick value creation, quick flipping, I find it at a personal level, it's not as motivating, right? I want to see legendary businesses. And so my lenses have shifted to every business wanting to be that in my selection criteria. So now in 3 years, you pick like 5. Because the bar, you keep raising the bar, right? And I think it's an evolutionary thing. There'll be some other kid who's 28 now starting a fund who thinks the same as I was back then. But as you grow older, that's the biggest thing that changes. So what am I putting 30 years of my life into this? I'm 15 done. I have at least 15 more. You put 30 years and you look back and you say you haven't built 20 great companies that people can recognize. How does it matter? What have you done with your time? I mean, yeah, you made some money, but you could have done it trading stock markets in the back of a room. Nobody would have known. You'd still make as much money. So I think that's what changed in my life.
Well put. Shani?
I don't know if it is okay to say a controversial thing out loud, but I think shedding labels, oftentimes it's a lot of like women entrepreneur or I don't know, impact entrepreneur and things like that. I think within a few years you learn to shed that label if you want to survive.
You're just an entrepreneur and somebody.
Just an entrepreneur.
Yeah. Yeah.
So, coming back to me, I think it is what an ideal founder archetype is.
Okay.
I think we all believe there is a certain kind of founder, a certain kind of whether it's an extrovert, someone who's capable of selling, rallying people. What definitely over now 100+ investments, you realize excellent founders come in all types. They come from all over. We had this thesis, but I think it is totally proven out. Or you can have someone who's quite brash and somewhat arrogant, but deeply, deeply fanatical about the idea. But to your point, I think that you made in your previous talk, I think you've got to figure out where our values align, but what that looks like, what that person looks like can be very different and sometimes quite contrarian to what you like. Right, in a person.
If I may add, I'd come up with a punchline which I'm quite proud of.
Which
That
is?
the job of venture capital is to pattern match.
Okay.
And so, but the only stories worth telling are the exceptions to the pattern.
Yeah, that's
So
good.
basically, it all seems like it's the same when it ends, but actually go back to the journeys are remarkably different. So that's our learning when you put 10 years into the business. Yeah.
Interesting. Well, we're out of time. People have planes to catch, and I think there's food outside as well. So, really interesting panel. I'll just quickly summarize what I learned, which is basically, I think we started with the question of India as a market being small, big enough is good or bad. What I've heard is it can be both, and seems like we're kind of finding the right balance, which I think is a good thing. India's role in AI seems like application, data, those are areas we really need to play in. Maybe not so much in compute infrastructure, chips, and all these things, which I think we are too far gone on that. When is the right time to raise? When you have the power, essentially, right? In a nutshell, that's quite good. What can we do in kind of from an Indian perspective? I think education is something that was a very consistent theme in terms of enabling more of this. Yeah, and so that was it. Hopefully, you can continue the conversation during lunch as well. But I just want to thank all of you for pretty interesting. Thank you so much.